It would probably be a good idea if I unmuted my mic before I tried to talk to you. But now that I've got it together, hey, family, happy Sunday. I am excited to be going live today because I have a very, very, very special topic that's near and dear to my heart. And I have a very, very, very special friend with me here to talk about it. So, if you're new to me or new to this page, my name is Timalyn Bowens, and I am America's favorite EA. As an enrolled agent, I'm licensed through the Internal Revenue Service to represent taxpayers, whether that be in an audit or in back tax negotiation. So, in this segment today, I'm going to talk to you, specifically you, my business owner friends, about how the misuse of your business funds can end up leading to back taxes. So, today with me, like I said, I have a very special and dear friend. It's another enrolled agent, and you may know her as the home biz tax lady. Now, if you have a home-based business and you have no idea who I'm talking about, please, as soon as you hop off of this live, don't go yet. Wait till you get off the live. Go over to YouTube, type in home biz tax lady, because if you have a question about your home-based business, she's probably addressed it over there. Okay? I would not bring anybody on here either that is, for lack of a better word, trash or doesn't know what they're talking about, right? So we have a subject matter expert, and we're going to talk about this misuse of business funds because it's a trap that I see so many business owners get into, even if they have good intentions, right? So, without any further ado, let me go ahead and bring my friend, Miss Lysandra Everett, the home biz tax lady, on.
Hello, hello, hello. Thank you so much for having me.
Lysandra, the pleasure is absolutely mine. Um, I'm gonna share with my audience if they don't know, I'm on a personal mission to fill the tax literacy gap, right? So I see tax news and I geek out on it. Like it's exciting to me. And
It's
I know
exciting
that's
to
true
us
for you
both.
too. See, so that's exactly why I was like, yes, this is who I want to talk about this with. And actually, the case we're going to be talking about, I didn't even know about it until you brought it to my attention, right? Because we're in these different tax circles together, and I saw you post it, and I start reading, and I have it up here. And as I was reading, like my jaw just kept dropping further and further down. So I was like, what in the world? And excuse me, because I do see people hopping on. So if you're on, please say hey. If you have any questions, drop those in the comments. We will try to get to them. If we don't get to it, charge our head, not our heart. But hey, Shane, how are you doing? Thanks for joining. So, back to this case. It's a former NFL linebacker, Bill Romanowski, who apparently has won 4 Super Bowls, but admittedly, since like Cunningham, Emmett Smith, since all of them have been gone, I don't know what's going on in the NFL world. Okay, I might watch the Super Bowl halftime show and eat food, but anything else, don't ask me about it. All right. So, this former NFL linebacker and his wife are being sued by the Department of Justice, and they're saying that they owe $15.3 million in back taxes. Lysandra, what's your first reaction when you saw that? Was it the same jaw drop?
Child, oh my gosh. I, I was like, honestly, my first was action is like, how did we get to $15 million? What happened to like the first million? Like, why wasn't there something done there? But we had to get to 15. Like, yeah, yeah.
Yeah, same with
It made
me.
me lose my mind. I was like, holy cow. That was the first thing I said.
But then it got worse. So, this isn't just from he and his wife, him being an NFL player. This is because they also had a business. Now, I'm not on their legal team, I'm not on their accounting team, but I know personally that NFL players receive W 2s. And a lot of times when I work with high wage earners, which if you're in the NFL, you would qualify as a high wage earner, I see these high wage earners being told, advised to get some kind of business so they can get more deductions and write offs. If you're outside of the tax world, that sounds like an amazing idea. But for those of us in the tax world, we know that if you have a legitimate business, then the whole purpose needs to be to make money. Yes, you have more things you're eligible to write off, but you still are supposed to be making money. So, yes, you're going to get those additional deductions and write offs, but, buddy, you should still be making some more money. But anyway, different different topic for a different day. So we have this 15.3 million in back taxes, and what the Department of the Treasury is saying is that this is actually stacked up from the years between 1998 to 2007. Lysandra, one of my favorite things that you say is the IRS is slow, not stupid. I quote that when I speak to small business owners because they'll say, "Well, my friend Johnny and Jane, they're over here doing that." And I'm like, 1 year good, 2 year good. We see in this example right here, this was almost 10 years that they're going after, but 1998 to 2007, they're suing them in 2023. So, were they under the radar or was the IRS just slow?
So I was looking at this. So you, like you said, I go and geek out on this thing. So I had to go and find the actual filing and in the court because I was like, this is really going to give you the details that some of these articles are not. And here's the thing. They're suing them now because that CSET is about to pop up, right? Because their assessment dates are June 28th, 2013.
So let me stop you because, of course, we got our people that aren't tax folks. So just so they know what the C said is, will you break that down for them?
So the CSET is the collection statute expiration date. The IRS has 10 years to collect a debt from the time it's assessed. That means that there is a tax return filed and they have actually said, yes, you owe X amount of dollars. Right? It's not from when the return is due. So some people think, oh, well, the tax return was due on this date is 10 years from that date. No, it's from the time it was assessed. So my first thought is they had 1998 and the assessment date is June 2013. So did somebody just not file some taxes? Like, what happened between 98 and 2013? Like, I don't understand. You know what
He
I
was too
mean?
busy in the
So
NFL, I guess. He was winning those
I
rings.
I guess so. And so understand that there is no statute of limitations on an unfiled tax return. Okay. So that was the first thing. I was like 1998 to 2013, but what was y'all doing? Like, okay, oh, it gets better because see, when I looked at this, so just to give you an idea of how these penalties and interest will rack up. So for 1998, they have an assessed amount of 1.3 million, but their balance as of March of 2023 is 4.6 million dollars. So they owe more in penalties and interest than they do in tax right now.
And they
Ooh,
don't seem like candidates for first time abatement.
oh man. If if they are, baby, you better hope that 4.6 million comes off because auntie, woo, that's a mess. And so, but getting back to the initial issue, which is the co-mingling part. Like, okay, so co-mingling is a $5 word for mixing business and personal money. Okay. And it's for paying for personal expenses out of your business account, paying for your business expenses out of your personal account. When I get a new client, new business owner, the first thing I ask them is, do you have a separate business bank account? And immediately it's like, no. I'm like, okay, so your first order of
I'm
business
glad
after
I'm
we get
not
off
the
the
only
phone,
person.
yeah,
It
like your
happens to
first
me
order of
too.
business after we get off the phone is you need to go get that, right? Because that is the first step to prevent commingling. That's the first step. It's not the only step, it's the first step. Okay. Now, what these people did, now here's the thing, and this is one of the things that I also want to caution about influencers as well, is because people think that just because somebody has millions of dollars, that they know exactly what they're doing and they know what they're talking about. And that could not be further from the truth. Okay. So you got these people, this a whole NFL dude that's made these, because you have to make some money to owe $1 million, right? You got to owe some money to owe. You got to make money to owe $800,000. So they made the money. The problem was how they spent said money, right? So one of the things that business owners automatically think is, this is my money. I can do with it what I want. And that's not exactly correct. When you have a business, the money belongs to the business. Just because you own the business doesn't mean the money belongs to you. It belongs to the business. And when you have profit, thou shalt pay taxes. That's the deal. Now,
And that's for
so
any entity type,
yes,
right?
any entity type. I
So
don't care
that
if you are
confuses
sole
people too.
prop. If you woke up today and decided you're gonna go sell pencils, okay, you can be that sole proprietor. If you make money selling pencils, baby, you gonna owe some taxes. That's just the way it is. Okay. And so then we get to the part about the expenses. These folks were straight wilding out, okay? But
Not
here's
even
the
they were
thing.
just tripping.
Here's why they were tripping though. This is why this is so juicy. They were assessed like $78,000 for one year. I don't know what year it was. I can't find it right now because I just went through this whole thing. Oh, so here it is. So they were assessed a deficiency of $78,000 with penalties for their 2007 tax year. Well, they decided they just weren't going to pay it, right? So what they started doing was using the money directly from their business account. So they weren't showing income on their personal returns. So they didn't show income on any of their personal returns like forever. And so then this is where we say the IRS is slow. They're not stupid. So if you've made this $78,000 and you haven't paid it, what exactly are you doing? So the IRS goes and finds out what you're doing. Oh, so you haven't reported any income on personal returns. How are you living? Let's go find out, shall we? Now, their corporation is a California corporation. California is about to straight abuse these people if they haven't already. Okay.
Big facts. Big facts.
California ain't the
They don't
one
play.
nor the two. No, at all. And so they have that's a California corporation. And then he also has an LLC that is based out of Nevada. Now, let me tell y'all something. People be going to form these Wyoming, Nevada, Delaware corporations for and not forming in their states. So let me say this. Like people I've actually had people say, well, it's because um, of anonymity. Like if you file in those states, then you're anonymous or whatever. You might be anonymous from the general public, but not from the US government. And on top of that, with the Corporate Transparency Act that's coming out, you ain't gonna be able to hide from nobody. You try as you might, but thou shalt not hide from the government. Okay, so then what they did, instead of paying these taxes, they started taking the money directly out of their business account. Now, like you, Timalyn, I'm asking, where is their accountant? Where is their attorney? Is there anybody saying, you can't do that?
Look, because I was like, somebody help the babies. And right here, I just want to share some of the stuff they were paying for because looking here at the lawsuit, because when I've gone in to clean people's books or helping them get prepared for an audit and they are commingled beyond like what people would probably even believe, this wasn't that shocking. Because, like you said earlier, people have a business, they feel they made the money, they're entitled to the money and to spend it how they want. Well, if you're going to do that, and the thing here too, they probably counted those things as expenses, which is what probably made it worse. But if you're going to do that, you still have to pick that up as income on your personal return. You don't get to double dip and like now the business is writing it off and you're not picking it up. So these folks paid rent for their adult daughter from the business. And I can see somebody right now's face just tearing up, being like, well, what's wrong with that? So many things, but we'll get back to it. They paid for groceries for their adult son. So I don't know if he still lived with them or he had a roof over his head. He just needed food. Then they also paid for day spa appointments, plastic surgery appointments, chiropractor appointments. I've seen all three of these because you have to be pretty to get online and make money, right? Or I have to be relaxed and not tense. There's a Lysandra, I've heard almost it all. I brace myself when I get on the phone with new clients because I just never know what they're going to say. I've heard that before, and like I said, it was not malicious. These people were well-intentioned and were like, "Well, people in sales with me told me that I can pay for my spa appointments. Do you have an accountable plan? Do you have some way you're tracking that so you can pick it up?" I still probably wouldn't do it that way, but if you're gonna do it,
You got
there
to
is a
have
way that it
something.
can be done. Yes, and that's where tax planning comes into play. So where was the tax preparer that was like, "All right, dude, you make millions and there's nothing on this return. Where is your tax planner at? Where is your lawyer?" Because I would have been like, "I can't touch this."
Bookkeeper, somebody, anybody,
Somebody.
somebody. Just no. So obviously, like I really want to see these tax returns because I really want to
I do
see whose
too.
name. If and I promise you, if I see self-prepared on a corporate return, I am going to just fall out if I would ever see that.
And
But
folks, this is why we say when you're choosing a tax professional, they better have their business name on there. They better have their signature and their P10. They tell you something funky is going on with their P10, they are not supposed to be preparing returns for pay
that's
this
it.
season, and you need to go find somebody else. Okay?
Absolutely. Absolutely. And so, I have so many other questions like why are they paying $10,000 a month for rent for themselves? Like, I don't understand. That's a whole nother financial planning. Y'all don't own no dirt kind of question. Like, but okay, moving on. Sorry, like moving on. Okay, so here's what happens though. So the only business structure that actually pays its own taxes is the corporation. Every other business structure is a pass through, meaning your income and expenses are passed through whatever that net profit or loss is passed through, and you pay that on the personal return. The only time you have a pass through that is paying any kind of tax, as if they change like from a corporate structure, or if they're paying some penalties or something, right? Those are the only times that you're really going to see a pass through entity paying a federal tax. Now the states are something completely different, right? Because you may have to pay some state tax for that entity, but by and large, the corporate return, the C corp, is the only business structure that pays its own taxes. Now, when these people went and paid all this money out, they deducted these as business expenses, which then reduced their taxable income from the corporation. So they didn't pay the tax on the money at the corporate level, and then they didn't claim it as a dividend or some wages, some something on their personal return. So they didn't pay any money on any taxes on this money at all. So you know they made money, because how would they be able to go to the chiropractor and get the plastic surgery and get some Botox and paying rent for some kids? And how hungry is this boy that they got to buy his groceries? Like, what is going on? And so they deducted all of that. These are not legitimate business expenses because they have a
Oh,
supplement company.
so taking care of the owner isn't a legitimate expense? Sandra, are you
Oh,
sure? Do you know what you're talking about?
listen, listen. If it was, do you know how laid my hair would be on the regular? Would you think I would be in curls right now? I have all
Listen,
my and everything. So,
but
so when you are
it's something we
commingling,
see all the
though,
time.
all the time, all the time, and it's like, well, I have this image to maintain. And the IRS is like, that's really nice. No, it's disallowed. Like, you looked really good, but it's still disallowed. And so when you're commingling, you're mixing all that money together. You really, what happens is that you now allow what's called piercing the corporate veil. And what
Ooh,
that
talk
means
about that,
is
please.
you are now all of, because people talk about, we're going to get this LLC da, 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 for all of this protection and yada yada, right? The moment you commingle funds, you negate any protection that that business structure offers, because then what happens is that what the IRS, or the legal term, and I am not an attorney, so if there's any attorneys that watch this, don't come for me, okay? I am not an attorney, but um, basically they're saying you and the business are really one. You're using the business as an alter ego. This is really just you spending money. Like, yeah, yeah, you're running a business, but this is not a separate entity, because you're using it as your own personal piggy bank. So instead of you now having those legal protections, the moment that you start commingling, the moment that you start paying for personal expenses out of your business, you negate any of the protections that the business structure offers. So when people are talking about, oh, well, I got an LLC or I got a corporation, it doesn't matter if you're spending the money incorrectly. And that's what these people did. And it looked like they were doing it intentionally to dodge paying the government these back taxes.
And this is an extreme case, right? Because your everyday taxpayer is not going to end up owing 15.3. But we do have your everyday taxpayer that during the pandemic, maybe they got some stimulus checks. We had nothing but time, so people were on social media, right? And one of the biggest things that I heard, and maybe it's because I'm in the tax world, was get an LLC, start bringing in income, put your personal car in the LLC's name, put your house in the LLC's name in a trust. But like you said, if it's not a legitimate business expense and you're using business funds to pay for those things, you've pierced the corporate veil. There is no point in you having an LLC to begin with if that's how we're going to be shucking and jiving and doing all that stuff. So it's so important. And like I said, if you have a home based business and you're not following Lysandra yet, please make your way over to YouTube after the video. Make sure you're following her. The content is legit. Promise you, I wouldn't send you to trash. But it's one of those concepts that people just don't understand. And over 90% of the people that I work with that owe back taxes are business owners. And there's no school per se to prepare you for being a business owner and to why this does not make sense. People think it's a loophole. Oh, I'll put it in the business name and then write it all off. No, like you said, if you're selling pencils, get your ink pen selling them. Little baby, Uncle Sam wants his money as soon as you hit that $400 threshold. Okay. He wants it, he's coming for it. So, finding legitimate ways to be able to write stuff off is all what this tax education stuff is about. We don't want you to be like the Romanowskis, even if it's not the 15.3 million.
Yeah, because I could owe the 15. I'd be like, wait a minute. Just the 15 part. I don't need the millions. Like the point three, the none of that. Okay. But but the thing about it is, and here's the thing, guys, like most people will look in like, okay, well, I don't have a home business. I have a this, I have show me a business that didn't start at home. Show me one. Apple started in a garage, Meta started in a dorm. There is not a business that I know of that did not start at home. But there are ways that you do things and you grow, right? Because that's the thing, or people will come to me and they've made no money, but here they're trying to write off all these expenses. And I'm like, okay, A and B don't match. And I'll give you a prime example. I had a fairly new client come to me. He went to one of these seminars to flip real estate, right? We gonna wholesale some real estate. That's what it was. And of course, he had to go and form a whole entire S corp. And so when he called me, I was like, why on earth did you do this? Like, you haven't gotten your first property. Like, what are you talking about? And so then when he sent the profit and loss statement, I didn't even ask for the balance sheet, but I see this amount for rent. I see this amount for utilities. And I was like, do you have an office space? He was like, no, this is the portion of my rent that goes to my home office. I was like, oh, no, 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 no. It's not how this works. So that's what I mean. It's like, so he went to this seminar and he's listened to all these people with all these millions of dollars saying, oh, this is the way you need to go. But what you need to do, and what they do is, and they like, you need to get with your tax professional. 9 times out of 10, and obviously these people don't have a tax professional, but 9 times out of 10, people don't have someone they can call. They're just listening because you have made these millions of dollars. And because you have these millions of dollars, you got to know what you're talking about. So I'm just going to do what you say. And that's why I caution people against listening to influencers, because what they're saying, it might sound good. It might sound like this cool loophole, but it might be that loophole that you hang yourself on.
Ooh, I need to jot that one down too so I can start using that. But you bring up a good point, and here's the thing that people don't understand as well. When you have somebody making millions of dollars, yes, I would trust that they're being educated to understand what they are signing, but they're not making their millions of dollars in the tax industry. So, if you've ever played the game of telephone in school, by the time the message gets around, it's all the way jacked up. That's what happens with your favorite millionaires, because if they were a subject matter expert on tax, would they be doing whatever they're doing, or would they be in tax? Think about think about that. But also, Sandra, you brought up a good point. You said people don't have that person to speak to. And for my business owners, I just want to give you a tidbit of advice, because sometimes people do reach out to tax professionals and they're like, well, they didn't give me any information. There are different categories and levels to it. Okay. So we have those that only do tax prep that really shouldn't be advising anybody about anything, because there's nothing wrong with being in their lane and doing tax prep, and that's what they want to do. But that is not preventative care, right? It's not tax planning. We have some people, they don't want to do any tax planning or preventative care. They want to put your documents through. And like I said, if that's their jam on. When you reach out to a tax professional for preventative care, usually if the person is able to handle your question, they've spent time and money to be able to help you with planning. That's not going to be a free consultation. Just like this seminar you went to with the millionaire wasn't free. So, if you're really serious about your business and really serious about finding legitimate loopholes for when you're making money, just like you made that investment in the seminar, need to make that investment in a tax professional that can provide you with tax planning. And that give you that for free. That's not even a plug for me because tax planning is not something that I even specialize in. But 9 times out of 10, the business owners that I work with that owe over $100,000, they either did not go to someone for tax planning or they did not listen to them. And then that's how they end up owing over $100,000, right? Because you guys are phenomenal at what you do. You can go make the money, but again, for you too, if you were a subject matter expert in tax, you should be working with me, right? You shouldn't be doing what you're doing. So just keep that in mind when you are making the money and you want to find these different ways to lower your tax liability. You're going to have to make that actual investment in tax planning so you don't end up being me or Lysandra's client later in tax trouble.
And also with that, um, one of the biggest questions I get when I tell people, like, you need to schedule this consultation. And the first thing that people want to ask is, why should I pay you just to talk to me? And I will respond with, because I know what to say. And see, like Timalyn said, we invest thousands of dollars annually because we have continuing education. Notice the word continuing. That means it does not cease. As long as we are practicing in our craft, we have to have continuing education. So we've invested in that. And if we've made the investment to become smart enough in this tax game to be able to assist you to save money, save your tax dollars, then yeah, you should pay for that. And it's going to be cheaper than getting out of trouble. Like Tamlin said, this is preventative care. That's why you go get physicals, because if you wind up in the OR or the ER, that's going to cost you more money than the physical would have cost you just to go and make sure that you stay healthy. So that's why you pay for the consultations, you pay for the tax planning. You make sure that you're dealing with reputable people, because reputable people, one, are going to charge you, and two, they're going to be asking you a million questions. And the reason we ask a million questions is so that we can get the entire story. Because when you go to YouTube, like, yes, I have a wonderful YouTube channel. I love my YouTube channel, even though I haven't shot videos in like the last year. Love my YouTube channel. But if you, when you're listening to my videos, I also tell you, listening to my videos is not enough to make a full educated decision about your situation. It's only answering one question that you have. That one question is just one piece of the puzzle. Tax is a lot of if thens, right? So yeah, so be willing to pay for that. I know we don't went down a rabbit hole, but I just really wanted to share that. um, but here's another thing that I noticed in this case too. Not only were they commingling their personal life, they were also commingling businesses. So they were mixing money between this N53 company, and then there was a Pro something something LLC that they had, right? So they were mixing money in between these two businesses. That's commingling as well. You, when you have separate businesses, you have there's you're two different people. So even though you got people that own like seven businesses, yeah, you are seven different people. that seven different sets of books, which these people obviously didn't have no books. Okay, I'm gonna go with they had no books, because ain't no CPA, EA, bookkeeper in their right mind would have signed on to continue with this foolishness and mayhem.
Look,
Just
you're
no way.
fired. Disengagement letter ASAP.
That it ain't gonna be nice. Like no, just no, get out. But when you do that, you also open up the other business to scrutiny when you're commingling business funds. So yeah, you got different businesses. If you got seven different businesses, you got seven different profit and loss statements and balance sheets. You've got seven different sets of taxes to pay. Listen, and the next thing people ask, well, what about a holding company? It's just gonna roll up. Listen, everybody trying to be Warren Buffett, but don't have Warren Buffett money. Warren Buffett is like one of the biggest um, holding company owners, but he owns parts of separate corporations that file and pay their own taxes. Okay. So this is why I'm like, y'all go out here and get all this business structure trying to be Warren Buffett ain't sold a t-shirt. Like you don't need all that right now. You're trying to save on self-employment tax that you don't even owe yet. Like, you know, it's okay to crawl before you walk and then run. And, honestly, there are worse things in life than overpaying in taxes. Committing tax fraud, or getting sued by the government for 15 million. That's right up there with worse things.
Way worse. And I'm glad you brought that up, trying to save on self-employment tax before you even owe it. I had a business owner ask me a few weeks ago, and I was so happy for this question because again, the whole filling the tax literacy gap, there's stuff you just don't know when you first go into business. And they were asking me, like, what does it mean to actually scale? And I was like, I'm so glad you asked. That means you have a proven process that you know works, and then you set it on fire. It's not, I'm going to go start seven different LLCs and now I'm a multi entrepreneur and all that, yada, yada, yada. Don't have $10,000 to show on your tax return. It's important that you all don't hop from tax preparer to tax preparer. You have somebody that understands your business structure, they understand what's going on in your life, and then that is how we get into this preventative care. Hey, Cedric. Cedric says, hey there, ladies, and good info. And you were absolutely right, Cedric. They're putting the cart before the horse. So many business owners do that. And then, like I said, Lysandra, that end up being our client because, well, I didn't know I was supposed to do that. And I didn't know I was supposed to do that. It's like, but if you would have taken as much time to invest in the tax planning, or to be educated from a tax professional versus some guru out here that's huge on TikTok or Instagram, which don't get me wrong, my tax brothers and sisters, some of us are out here doing it and getting big out there. But you can always test the tree by its fruit. If that content starts getting a little funky and certain people are liking it, you may want to dig in deeper before you test that strategy out for yourself, right? Victor Jones, CPA, says, I'm enjoying your discussion on tax matters. Thank you so much, Victor. Thanks for tuning in.
Victor got all the letters. Hey, Victor.
Yeah, he does. Um, so, Lysandra, let's say we have somebody right now and we have scared them. They're like, I don't even want to be in business anymore because I know I've been commingling. We're not going to ask you guys to raise your hands. You know who you are. If they're in this situation and they know they've been commingling, they don't want to get hit or rather punched in the face by the IRS. What can they do to correct it?
So the first thing is to stop it. Just stop it. That means that you need to go open your separate business bank account. And the first thing people complain about are the expenses to opening a business bank account. You can find different banks. You can use a credit union. Usually, credit unions offer a lower fee for business bank accounts than a regular bank. Because my first business bank account was at a credit union, and thank you God that they had no fees. I appreciated that. No fees. And then secondly, you got to then go get bookkeeping help to separate this, to really untangle the mess. Because now when people are like, oh, bookkeeping, you're like, listen, stop list even though there are companies out here telling you, oh, this is so easy, if you just go get X program, you too are a bookkeeper. And that is such a fallacy. It is more than just categorizing things. There's a lot more to bookkeeping than that. But that's the next thing, is first you got to get that business bank account set up. You need to divert all of your business income to that bank account. Stop getting y'all's money on Cash App and all of that stuff, you know. And like, look, I get it too, because I do have sometimes some people are like, well, all I have is Cash App. If that's the best way for me to get my money, I'm gonna get my money on Cash App and I'm going to put it in the business bank account. Okay,
Listen, I turned
that's
into
what it is.
Rihanna real quick. Better run me my money.
Run me my munties. And if you need to run me my munties on Cash App, Venmo, all of that. But at the end of the day, that money is going to end up in my business bank account. And you need to pay your business bills from that bank account. Okay. So, and I get it. At first, it might seem a little weird, like, oh my gosh. And then if you have to, let's say your business isn't making enough money yet, then you move your money from your personal account, you take personal money and put it into the business account. Okay. That's how this works. And then with the bookkeeping help, you can then really decipher what's your business expenses, what are your personal expenses, and then you grow from there. So that's really what it is you have to be cognizant and get a debit card from that business bank account, because everybody needs cards these days. Very few people you can do like a direct debit and all of that, right? So you get your debit card, and that's what those bills are being paid with, so that you are not mixing those funds. And listen, hire someone to help you with the tax, even if you don't know what is an eligible expense or not. That's when you reach out for help. You have to get help, because listen, there are a lot of you out here with some fantastic ideas. I love my visionary type people, because y'all all the way out there in the sky and painting beautiful pictures with whatever it is that you do. But us people that are in the box, you need an in the box person, because that's just not your zone of genius. I am not that creative think of stuff person. That's not what I do. That's not how I'm smart. And I get a lot of creatives who are like, I should know this. I'm like, no, that's just not how you're smart. It doesn't mean you're not smart. It's just not how you're smart.
That
So
part.
that's the thing that I really want, you all to take from that. So if you're commingling right now, you got to stop. In the story. Open that business bank account, put all your business money in that business bank account, pay your business expenses from that business bank account, and then you actually do get to pay yourself, right? So you take the money from your business and then put that in your personal account, and then that's when you pay for your mortgage and gas for the car and the utilities for your house, go get your hair done and all of that. That's how this works. But by separating that money, then you're figuring the correct tax that you owe for that business, and then you are also and then if depending on your business structure, then you also have the income on your personal tax return as well.
And what you said, like hire that bookkeeper, that accountant, because that preventative care, not only is it going to help you with not getting hit by the IRS later, you can plan. You can plan, how much am I going to actually pay myself? What can I afford to do in terms of marketing? That's what you have to do in order to be able to scale. I've had people tell me, like, I can't afford a bookkeeper, I can't afford a tax professional. But honestly, truly, in your business, if you want to thrive, you can't afford to not have one. And I get it. I really do get it because we all had to start somewhere. I didn't have a rich uncle that just gave me money, seed money, you know what I'm saying? But when I tell business owners, let's say you're just a single member LLC, right? So you file that Schedule C. The average Schedule C, according to the IRS instructions, and correct me if I'm wrong, Lysandra, I can't remember if it's 12 or 15 hours. If we have a business owner and they dedicated that 12 hours to marketing their business and actually making sales, they would make way more money. So actually, and let's be for real, it's taking y'all on TurboTax and H&Rblock.com way longer than 12 hours to do it. You're losing money. If you
You
need
are
the money,
absolutely losing money.
like I said, you're phenomenal at what you do. Spend that 12 hours, which will probably only take you one or two to afford a good prepare, depending on what your business is. Um, Go do that. So, like Lysandra said, you can stay in your zone of genius. Just because you may not get the ins and outs of tax doesn't make you not smart. Understanding your weaknesses and where you need to build out your team is where you actually show even more of your smarts and you get to focus on that area of genius. So, thank you for bringing that up. We got one last thing ish, I think. So let's say our friends, they caught this broadcast late, they're already in trouble, and their bill isn't 15.3 million. Maybe their bill is 150,000. Well, we'll give them 50,000. They're already in trouble with the IRS. They don't have that 50,000 to pay right now because they don't have bookkeeping. So they don't know how much they're making, what they should set aside for taxes and everything. What are their options if they owe the IRS and can't pay today?
First of all, make sure you file your taxes on time, even if you can't pay, right? Because you automatically reduce penalties by filing on time. Okay. Secondly, if you owe money and you're freaking out, then you need to call Timalyn or myself because okay, shameless plug. But no, but there are payment options, okay? And especially if you wind up owing both the IRS and the state, because 9 times out of 10, if you owe the IRS, you probably owe the state too. So that's why we tell you to actually reach out for help. Do you even know that that's right? Because your taxes could have been improperly prepared. So that's why I say to actually get help. Because now, if you know that, yes, everything was done correctly, I owe this money, there are payment options, there are installment agreements. There are partial pay installment agreements, even the offer and compromise. Now, before y'all run out here and say, I want this offer and compromise today, understand that that is not just because you want it. You have to qualify for it, okay? It's not just like, who I owe $15.3 million and you got 30 million sitting in the bank and like, I just don't want to pay this money. And so I want to offer a compromise. That's not how that works. Okay. But the offering compromise is an option. But the beginning of all of that, you got two tax people who are telling you the beginning of all of that really is the bookkeeping, right? That's the thing. If you've got good bookkeeping, if you've got good books, that's what's going to help you manage your money. It's going to help you make educated decisions about your money. You know, all those things, because that's what we're going to do. We're going to be like, okay, we need to look at these books and records. So just know that if you owe that money, that you do have options. And if you get this letter and freak out and like, I really don't know what to do, that's when you need to reach out for help. Of course, we're on here, so I'll say call Timbaland, call me. But there are plenty of enrolled agents that are around to help you. That's my point.
Absolutely. And I will tell you, you know, I didn't even ask for that plug, but I appreciate it. Um, when you are working with somebody that is legitimate, they're not going to not see your financial information and say you qualify for an offer in compromise. All right. Now, Now, everybody does things a little bit different, but I can speak for Lysandra 'cause like I said, I'm not gonna bring somebody on here that's trash. Um, she's gonna actually take you through the process and see what you qualify for as an option. I do the same thing. If you're on here right now, you're looking at my YouTube and you're like, well, I'm gonna call Timlin because it's her channel. Y'all, girl, guy, call Lysandra because everybody's vibe is different. In a situation like this, you have to make sure you actually gel well with the person that you're working with because at the end of the day, I don't owe the taxes. Lysandra doesn't owe the taxes. We're the experts, but we can't want it more than you do. Right, Lysandra? Like, this is somebody that you're going to be partnered with, and they're going to actually represent you on the phone in an appeals or whatever before the IRS. So you want to make sure that you actually vibe with that person. So Lysandra, I knew this was going to happen. I was like, oh yeah, we're not going to take an hour. But then we got excited
Man,
talking
look.
about this tax case. Um, but before you go, I want to make sure, like I've already shouted out, YouTube, home biz tax lady. Lysandra has 25,500 followers. I think I met you, what, 4 years ago, and it was funny because the world's just small. I was like, "Wait a minute, I know who you are because 'cause I've seen your YouTube channel before."
And
But
I'm sitting here like, oh my God, I'm a celebrity. Oh my gosh.
so I'm gonna give a plug to myself, okay? Right here, because maybe you're not watching this on YouTube. After you go follow Lysandra, I want you guys to go to YouTube and go to America's Fave EA because check this out. I'm 30 subscribers from 1,000. My tax sister here put the heat on me to go ahead and hit this 1,000 this year. I said, okay, by December 31st, I'm going to do it. We're 6 months ahead of time, and I would love to hit that 1,000 within 5 days. Now, sisters, accountability people, they push you. So she's probably going to tell me I need to get another 1,000 in the next 6 months. But if you would do me that favor and subscribe, help me be 125th of the social media tax professional that the home biz tax lady is. I'd appreciate it. But in all seriousness, Lysandra, if somebody is interested in working with you or maybe just following you on social media, where can they find you to subscribe to your content? And then also, if you have anything that's coming up that you would like to let us know about, feel free to share that. Or if we got to follow you to find out about it, let us know that too.
Okay, so if you're looking for me on social media, I am the Home Biz Tax Lady on all social media. And yeah, and let me tell you something too. There's a thousand tax people out here that are actually doing the right thing. None of our content is exactly the same. So it's not a competing thing for me to tell you, make sure you subscribe to Timbaland's channel or subscribe to so and so's channel, right? Because everybody's content is a little bit different. So I would say, yeah, if y'all don't go over there and subscribe to Timalyn's channel, I'm gonna have words with some people. Okay, but moving on. Um, but yes, so now for accountability. So I am actually starting my own continuing education project, ETS Tax Institute, where I am offering continuing education for tax professionals. So the first class will be July 18th. I do believe we're starting with S Corps. And we're talking about learning the rules and learning how to actually prepare the return. So that is because, listen, one of the things that happened during COVID, I'm going to say this and I'm a hush, is that COVID took a lot of people out of the game. There are a lot of tax professionals that are good, seasoned tax professionals that left this industry. There are good, seasoned IRS people that retired and left the industry. So that leaves a huge knowledge gap between what what tax professionals know and even what people at the IRS knows. So it's really important for you to be educated on the rules, how to prepare returns, and even on the on the problem solving side, solving tax problems, because there are a lot of IRS people that don't know their jobs. And you, being the enrolled agent or the CPA or tax attorney representative, you might actually have to tell them their job. The only way to do that is to take continuing education. So whether it's me, somebody else, I don't care. But just know the ETS Tax Institute first class, July 18th. Now I put it out there in these interwebs, and it's, yeah, there we go.
Congratulations. Thank you for sharing. And y'all, she's not lying because, I've been in the industry now since 2011, which is a third of my life. But anyway, I'll get on the phone with an agent and I'll be like, "Whoa, little baby, like, am I getting paid to train you today? Because you don't. That's not right. Let's look at what the Internal Revenue Manual says. It's rough out here." Um, but Lysandra, again, thank you, my tax sister and friend, for joining me today for this little segment. This gets back to the heart of what I enjoy doing, and that's educating taxpayers. People don't understand it, but I truly enjoy educating taxpayers so they don't become my client. There are millions of folks out there that don't listen, literally millions of folks that don't listen. So I'm not going to run out of a pipeline of clients by educating people. Um, if you stuck around to the end of this broadcast, thank you so much for tuning in. If you're catching the replay, please hashtag replay. Let me know that you're here. Because if this was good to you, then I will continue to do them on Sundays and bring back people like Lysandra. So, Lysandra, I will give it back to you for any last words, and then we're going to get out of here.
Very simple. Stay out of trouble. That's it.
Well, you all
But
and
if you get in,
call me. If you get in, you know where to find us. Again, Lysandra, thank you so much. I appreciate you being
thank you for
here.
having me.
For everyone else, you enjoy the rest of your Sunday, and we will see you out here in these internet streets. Have a good one.
Absolutely. Bye, you all.